Okay, so welcome to this live tutorial on ethics in SBR. The ethics question is a very important question in SBR. It's 20 marks of your exam and it has 2 professional marks. There's a systematic way of approaching it, and so if you learn the process and the way, you'll always hopefully get most of the marks that are going, and normally there's about 10 marks for writing about ethics in the ethics question. The other 10 marks tends to be talking about the accounting principles which are in play. What are the ethical principles, first of all, for SBR? There's 5 ethical principles, but the ones in SBR we tend to use are just 3 of them. Then what are the threats? How is it tested in SBR? And then my step approach to questions. So here are the 5 ethical principles. What you shouldn't be doing in SBR is listing all 5 ethical principles out. You should only be listing out or talking about the ones which are in the scenario. So it's a scenario-driven question, absolutely. And what tends to come up is integrity and objectivity. Now, you don't need to write the definition. You just need to identify that it's an integrity issue or an objectivity issue. The other one that tends to come up is professional competence and due care. Now, we can't always go straight in on an ethics question and say they're acting without integrity. It might be that they're actually acting with professional competence and due care issues, i.e. they haven't kept up-to-date knowledge. So we can't always say it's an objectivity and integrity issue. So just bear that in mind when you're looking at a question. You need to feel balanced, shall we say. Confidentiality is not likely to come up. Haven't seen that often. Could get professional behaviour where they have to comply with relevant laws and regulations that discredit the profession. Don't get that mixed up with professional competence and due care. Professional behaviour is laws and regulations and discrediting the profession, whereas professional competence and due care is keeping up-to-date knowledge. Hopefully that's clear. So professional competence is where company directors and their advisors have a duty to keep up to date with developments in IFRS and other relevant regulations. Now, the circumstances that may threaten this include insufficient time, they're short on time, so they cut corners, they've got incomplete or inadequate information, or information is being restricted from them, insufficient experience or training, and inadequate resources. All of these threaten your professional competence. Objectivity and integrity is really about self-interest or intimidation, and it's associated with misleading information. You've got financial interests such as profit-related bonuses or share options, potentially, inducements to encourage unethical behaviour, i.e. a promotion, or you're looking to make a new listing, or you're seeking finance. These sorts of areas come up in these ethic exams questions. So the exam focus is question 2 of the SBR exam, and it's going to consist of 20 marks based on a scenario. The scenario may have several points in it though. It might not just be one accounting issue, there might be several or even up to 4. And they're going to require candidates to consider the reporting implications and the ethical implications of these events. So the problem will be potentially a manager has requested a subordinate or employee to perform an action which is not justified by accounting standards or is not morally acceptable. Or a manager has already performed an action which is not justified, and they've discovered this action and they're required to respond appropriately. Or the manager has already performed an action which is not justified or morally acceptable, and you are asked to discuss the issue. So any of those 3 types of scenarios can come up. So my steps to success are You need to review each requirement separately, identify the verbs, and ask yourself what it means. You need to read the scenario and which IFRS may be relevant and whether the proposed accounting treatment complies with it. And often the answer is no, but sometimes it is yes. So you have to argue your case. Step 3, you need to identify which fundamental principles from the ACCA code are relevant and whether there are any threats to these. And as I said before, it's often objectivity and integrity are intertwined, or it could be professional due competence and care. You need to plan the points for the marks available. Now, sometimes they have different requirements for each exhibit in this scenario-based question, but sometimes they just give you 18 marks plus 2 professional marks. And you have to think to yourself, where would you be allocating those marks? And you pretty much would draw it down the middle between financial reporting principles and ethical principles. So you need to identify for each of them the issue, the correction, and the action, the financial reporting ones and the ethical ones. And then step 5 is create a separate subheading for each requirement by exhibit probably, and you must write in full sentences clearly explaining each point. You would use the requirements as headings, but you would also have some subheadings in there for each issue. It's really important to plan and identify this in a well spaced out, different paragraphed way with headings, because that's how the marks will be allocated. Okay? So we're going to be looking at Specimen Exam 1, ABCO. And ABCO has 4 areas of discussion, which match the exhibits, basically. So 1, 2, and 3 are going to be the exhibits and their related parties, fair value adjustments, and impairment tests. And then number 4 is not an exhibit, but it's the 4th thing that you need to talk about. So here is the first question for ABCO. I could have a look at it on the actual practice platform in a minute for you, but we're going to go through it from a presentation point of view, and then I'll refer to the practice platform and show you it. So here is a typical requirement. You can see it says, discuss the ethical and accounting implications of the above situations from the perspective of reporting accountant. So you are the reporting accountant. And that is what you've got to look at when you're looking at the ethical principles here. So the accountant at Abbey Company is concerned with the disclosure of trading that has occurred between ABCO and the company that a director of ABCO is associated with. This director is also attempting to influence how the accountant should account for 2 issues associated with the consolidated financial statements. So we've got 3 exhibits. The first exhibit is about the related party transactions. So that is to do with the first issue, the company director and its relationship with both ABCO and Arkwright Co. Number 2 is the first of the 2 issues to do with the consolidated financial statements, which is subsidiary fair value adjustments and goodwill impairment calculations. This information should be used to answer the question requirements within your chosen response option. Well, your chosen response option will be the word processor because there's only one response option given to you. But please note at the bottom, the professional marks in question 2 for the application of ethical principles. So that will be 2 marks. Well, let's have a look at how we approach this. So the 20 marks is going to be split between the 2 requirements, the accounting implications and the ethical implications. The accounting implications will be 10 marks for making 10 points, covering all of the issues. So there should be a spread of marks. So do not spend too much time on one issue. You need to look at the number of issues in the scenarios and think, well, how many marks do I need to apply to that? And then the ethical will take the other 10 marks, but 8 points need to be made with 2 professional marks given for your application of the ethical principles, i.e. picking the right ethical principles and talking about it. So for the first part, where we're doing the accounting implications, you need to structure your answer. You need to think about which rule or principle or IS or IFRS you're stating. You don't need to state the number, but it is helpful. You need to apply the rule or principle to the scenario. So what's the correct accounting treatment? And then conclude. That just gives you a little structure. For the ethical implications, we should think about why should the accountant accept what the FD requires? Has there been any breach of any of the ethical principles? If so, which and why? And what action should the accountant take next? The action is going to get quite a few marks, as well as identifying the right ethical principle. So do not underestimate that part, okay? So that's the way we're going to approach it. First exhibit is related party transactions. And so here it states, the accountant has discovered that the finance director of Abbey Company has purchased goods from a company, Arkwright, which the director jointly owns with his wife, and the accountant believes that this purchase should be disclosed. The directors refused to disclose the transaction as it's, in his opinion, an arm's length transaction. He feels that if the transaction is disclosed, it would be harmful to the business and feels this information asymmetry caused by such non-disclosure is irrelevant, as most entities undertake related party transactions. So everything about that smells wrong, doesn't it? Okay, so let's apply our approach to it. Let's apply our approach. So subheading will be related party. Principle, so some sort of language, doesn't need to be this language, some sort of language which says the objective of, don't need to even say the number, related party disclosures or related party transactions or the related party standard, is to ensure that an entity's financial statements to contain disclosures that draw attention to transactions and outstanding balances with such parties. Some sort of wording like that is giving you the heads up on what the principle is. Then applying it to the scenario, you need to make a connection between the fact that he is a related party, because the key management personnel of Abbey and Arkwright, the entity from whom the goods were purchased, is jointly owned by that director, you can say with his wife. So therefore, there is a related party issue that should be disclosed, and because there was a transaction, there needs to be a disclosure of that transaction. Now, there's only 2 marks going for this because there's actually 5 issues to talk about. So you don't want to be spending too much time trying to get 3 or 4 marks from this one issue. You need to think to yourself, there's going to be about 2 to 3 marks maximum given here. So get in, state the principle, apply the principle, and make a conclusion, and you'll have got the 2 marks. The next issue in this segment is the director feels that competitive harm would occur if disclosure of an operating segment profit and loss was made. As a result, the entity only disclosed a measure of total assets and total liabilities for each reporting segment. Right, well, if you haven't studied segmental reporting, which is about reporting your operating segments, then you might find this difficult. But you could hazard a guess at what's going on here. They haven't disclosed it, and therefore you could pretty much say that they should disclose it. And therefore, that is the principle, the issue, and the conclusion. The principle is operating segments. If you didn't know it was operating segments, all you need to say is operating segments from the scenario are required to be reported. Probably don't need to even say the potential for competitive harm may encourage firms to withhold segment information. We should just say it's contrary to the standard and it requires information about the profit and loss for each reportable entity or segment. Therefore, profit and loss disclosures are required alongside the total assets and liabilities. I probably don't know operating segments. Well, I do, but You may not know them in detail. You probably haven't studied that part of our syllabus yet, but you can make a conclusion based on what's going on in the scenario that you should be saying they should disclose the profit and loss. Hopefully you can see that. And then when preparing the financial statements for the recent year end, the accountant noticed that Arkwright Company has not paid an invoice for several $1 million, and it is significantly overdue for payment. It appears that the entity has liquidity problems, and it's unlikely that Arkwright will pay. There is a big issue here. Arkwright, remember, is a related party. So the accountant believes that the loss allowance for trade receivables is required. Finance director has refused to make such an allowance and has told the accountant the issue must not be discussed with anyone. This is a major issue here, where it should be making a loss allowance for something that will not be paid. And so the principle actually is IFRS 9, where we have a 3-stage model to impairments of financial assets. Again, if you haven't studied this yet, this knowledge will come once you go through all of these standards. But the principle here is it doesn't smell right, and the accounting policy should be, even if you don't say it's IFRS 9, you don't say there's a 3-stage model, you could be saying at the principal stage that they should be having a loss allowance or a provision for that unpaid debt, or even say it should be written off. And they need to get some additional information to make sure it isn't needed. And so there is a suspicion here raised by the fact the accountant has been told not to discuss the matter. So the conclusion is it appears it is an overdue debt and is credit impaired, and the loss allowance is required. So hopefully, having some knowledge you can apply to these accounting principles in a systematic and coherent way by using my 3 steps here. State the principle, apply it to the scenario, and make a conclusion. You don't need to have the numbers, but you do need to have some basic knowledge of the standard to be able to apply that using your opinion. So the other 2 issues, which I won't go through in detail, because we can look at the answer, which I'll send out with this tutorial. One was subsidiary fair value adjustments, and the other one was a goodwill impairment calculation. The issues here is they don't want to make any fair value adjustments when they're consolidating their subsidiaries. That is contrary to IFRS 3, where you must fair value the subsidiaries' assets when you're taking account of a goodwill calculation and consolidating. And the reason they might not be wanting to do that is because reducing fair value adjustments will improve the performance of the new acquisitions and the consolidated financial statements. With goodwill impairment calculation, they're trying to not impair their goodwill. You have to test goodwill annually for impairments, and they're using the wrong basis for testing for impairment of goodwill. And horror of horrors, the director has indicated that he will support a salary increase for the accountant if the accountant follows the director's suggestions. That refers to probably exhibits 1, 2, and 3, even though it is in exhibit 3. That is the fundamental issue going on here. The finance director is trying to coerce the accountant into supporting his views on all 3 of those exhibits. And therefore, by reducing any impairment on goodwill, you are obviously going to have a positive impact on the financial statements because you won't be writing it off to the profit and loss. So having some knowledge of the standards for this ethics question is probably using a lot more common sense and saying it basically to get those marks, following the principle, the apply, and the conclude way of approaching each of these issues. So now we come to the ethics part. So remember, this is for 10 marks, 8 points plus 2 professional marks. And the way we lay this out is, first of all, we start with, should the accountant accept what the FD requires? What should be happening? So my answer would be the accountant should not accept the FD, what the FD requires, without discussion and valid justification. The FD cannot choose which standards they do or not apply. They seem to be able to want to cherry pick what they want. We must be saying that they must all be applied to faithfully represent the position and performance of an entity to its shareholders and stakeholders. That is the issue. We should not be just picking what we want from the standards. We should be applying them faithfully. Has there been a breach of any of the ethical principles? If so, which and why? Well, everybody should hopefully think, absolutely, he's not being objective. He's lacking integrity due to his self-interest. Or you could say he's not being professionally competent. We're being nice here. It's very obvious from the scenario. It appears that to be the former, as the director's trying to coerce the accountant into acting unethically. And I have underlined the bit in the scenario that I've copy and pasted into my answer. He will support a salary increase for the accountant if the accountant follows the director's suggestions. There is an undue influence on the accountant. He's trying to coerce him or her. So what action should the accountant take? The accountant should discuss the matters with the director. The technical issues should be explained and the risks of non-compliance explained to the director. Just in case he isn't professionally competent, just in case. But if the director refuses to comply with the accounting standards, then it would be appropriate to discuss the matter with others affected, such as directors. Seek professional advice from the ACCA. Legal advice should be considered if necessary, and as a last resort, resignation. So following that step process for the ethics questions hopefully enables you to get the most marks. So there's 10 marks going. You needed to have 8 points, and then you get those 2 professional marks for identifying the correct ethical principles and applying them effectively. It is a 20-mark question, and you need to give it the time it deserves. So you're going to need to give this question 40 minutes. So that is my step process to ethics and SBR. And hopefully you'll all be able to follow that process and do well in the ethics question. I'm not looking for 20 marks, obviously. I'm looking for you to be getting at least 14 to 15, and that would be a really good ethics question, because we don't always know the accounting standards and issues that they're going on about, but we can apply the ethical principles very well. So you should be getting most of those ethics marks and probably half of the accounting issues marks. And that would be a very successful question in SBR. I just wanted to show you the question, though, on the practice platform. So here it is on the practice platform, and this is how you need to approach it. You can see you'll have the requirements here, which tells you the ethical and accounting implications. So this is what leads your answer. You need to lay out the accounting implications and the ethical, 2 separate parts of the question. 10 marks, 10 marks. In the word processor, though, what I do is I put the question at the top. So I'm focused on ethical and accounting implications, and I would do that by copy and paste. Then I start with the accounting principles, and I start with looking at the exhibits. And I would go, right, this exhibit was named related party transactions, so that becomes my heading. But if there are anything in between, any other issues within here that I need to call out, I would use them as subheadings. So I've got the related party disclosure. I had the reporting segments. Now, if you didn't understand that bit, then potentially you might have missed out the reporting segments. It would have lost you 2 marks, but you would have potentially gained some extra marks by writing about more fully the other issues. You've got the financial asset impairments. So those are the 3 subheadings which are in this bit of the scenario. And again, you can see I've done principle, apply, conclude. really laying out the answer so that you can focus your points. You then get the other exhibit up, and of course you call it subsidiaries fair value adjustments, and therefore I've done a heading subs fair values. And again, it's a very short scenario in here, so you don't want to spend too much time, 2 marks maximum to get from this area. Pick up the final one, Goodwill impairment calculation. Again, that would be your subheading, principle, apply, conclude. You've finished your accounting principles parts. Remember, you now need the next heading, ethical implications. So we go down ethical principles, and my focus is what is the issue, what's the ethical breaches, and what are the actions. And so I've kept them separate paragraphs so that I can get my marks applied consistently across them. So I'd have 2 marks, 3 marks, 3 marks, totaling the 8 marks. And then the 2 professional marks come because I've effectively identified the ethical principles and applied the actions appropriately. So this answer I will download and put in the site and send to anybody who needs it, who is here on my free live. But this is SBR exam in action and your ethics question, which, as I said, I'm hoping most people will be able to get 13, 14 or 15 marks on. And that will help you a long way towards getting that magic 50 and passing SBR.